support and resistance levels are areas that most traders use to identify the areas of interest from which they want to take trades from. But most times traders have faced a problem of whereby you mark your level of support or your level of resistance where you want to buy or sell from. Of course, support, we're looking for buys, and resistance, we're looking for sales. Sometimes we mark those levels to look for these opportunities, but then the market ends up either making false breakouts or even breaking through them with ease, and then we end up losing money. So in this video today, I want us to identify those exact levels that can hold very strong or are very strong that you can use for your areas of interest. Now, when I talk about areas of interest, excuse me, when I talk about areas of interest, you probably know that area of interest, I've told you guys, area of interest, we get it from our area from our time frames of structure. Now, which time frame did we talk about structure? According to our teachings, we use daily and weekly. These two are time frames. But like I said, in case these time frames are very big for you, you can identify some of you use H4 as where you get your structures from, and other time frames also. Some of you use H1 and the rest. But according to our teachings, we do recommend the weekly time frame and the daily time frame, right? So these are the time frames I'm also going to use. Now, I'm going to use weekly because it's my favorite time frame for getting structure. But before even we get to that level of identifying exact levels that I want you guys to be using or to back test and see if really it's accurate, we're going to first go through the rules that I want you guys to follow, right? Now, we're going to look at the rules, and then also we're going to be looking at how exactly can you execute that. Now, let's start with how do you pick out the high quality levels, right? Or how do you pick out those structures out, and how do you mark out those levels whereby we're considering that it's going to be a strong level of support or a very strong level of resistance, right? Yeah. So let's start with identifying, identify or picking out the level that we want to trade from. And then we are going to just sieve it out and make it, and we choose out the best level which we are going to consider. So what are the steps that you're going to follow? One, you have to identify the level according to the rules that we have studied. For example, if the market is trending upwards, I usually recommend that you trade continuations. For example, you wait for the market to come here, and then it continues. But sometimes the market is not going to stop here. It may go a little bit lower. Now, this is what we want to sieve out so that we can mark the very accurate level, right? So, but first and foremost, we're just going to identify a level. For example, in this movement upwards, let me just clear this. In this movement, when the market is making high, low, so when the market makes a high, we know that it's going to come back down. The first step is you first identify this level, mark this level here, then you watch how price approaches it. Are we together? Watch how price approaches it. That's the first thing that you should always do. Why? Because if the price is approaching it in a very strong way, it's most likely going to break it below. Are you getting it? But if you see prices approaching it in a very weak way, and in most cases, when you go to the next lower time frame, for example, in weekly, when I go to the daily time frame, it's giving me actually a trending movement downwards. Then this level here is okay. So identify the area, the obvious area. For example, here we have said the market has made this high, right? This one here, and then that was broken up. But what do we expect the market to retest? Then we can go higher, right? According to the rules, the basic rules, right? So that's the first thing you have to do. Identify the level, watch how price approaches it. Are we together? Now let's first practice that here just on the chart. I'm going to back test on USDJPY. This is USDJPY, and then we shall pick another asset to analyze, and then you'll back test and watch how price approaches those levels, and also you see how if exactly what we are teaching really works or not. We shall analyze a real live market, right? So allow me to back test. For example, here this is a trending market which I've identified here. We can clearly observe that the market is making highs. This is a high, higher low, higher high, higher low, right? You see the market came back and tested this level here. Are you together? So what do we expect again? Since the market has broken this level again, we expect it to come back and test this level, which the market has not yet done. So what are we expecting? Of course, we're expecting the market to come back and retest here. So we are saying that identify this area and mark it. So I'm just going to delete this one. Allow me to delete this one. We're going to identify this level where we want price to come back to. Now, I've always mentioned that if you're an experienced trader, you can look for your rules as the market is pushing up. Look at how it is getting exhausted, and you can trade up to this. This will be your target. Now, but for us, we want to trade continuations, right? We're not focusing so much on reversals. Today, we're trading we're looking at opportunities of continuations, how to mark levels where you want to trade with a trend. right? Support and resistance levels that are going to work for you. Now, for example, here we're focusing on this support here where I want to take buys from. We've identified it, and now the next thing is for us to watch what? How price approaches that level. So let's watch how price approaches, right? Now, you can clearly see at the market approached it with a very strong momentum, right? So what are you going to do next? Well, remember, we have said that the market, if the market breaks a high like this, right? Watch how it approaches. We recommend it approaching. You should always take those that are approaching in a trending way. Do not focus on such markets whereby the market approaches with a very strong momentum. Now, if the market is approaching with a very strong momentum, what do you do? Or even if it is approaching with a very good momentum, what do you do next? The next rule is what is going to help you to avoid being faked out, right? The next, remember we said we're going to talk about the rules of trading that, and the first one, how we're going to pick out the levels. So we have first spoken about how we are picking out the levels. Now let's include these rules also that is going to help you now. So what are the rules? First and foremost, you have to make sure that the market broke this level here with a strong push, right? Even if it is a sell, even if it is going down like this, the break should be always strong, or even if you can call it an impulse, right? Even if it's not an impulse, but it should be very, very strong, a strong break, but mostly favorably should be an impulsive move downwards, right? Then secondly, you're going to, remember we have identified this obvious level. Now after this, we're going to identify which level was not tested when the market was breaking. Are you getting it? So we have said the next step is identify the untested level. So if you look at this, we have marked this level. Where's the next untested level? We remember we said that this level here was tested. The market came and tested it. So the untested level we can identify here is this middle level here. I'm just going to mark it with 2 lines here like this. You see? So I'm just going to delete this, right? Now, meaning that the market is because of this impulse, right? The market is most likely going to come up to here. Now, the third one is not a must always, but it also helps you when the market is going to change trend. For example, right now we're in an uptrend, higher high, higher low, higher high, higher low, higher high, right? So also the third rule is you have to identify the low, the last low. Now the last low here is this area here. Now here we know that the market is either going to change trend from here, but with this impulse here, remember we have said, it's most likely going to a bit trap people and continues lower. Are you getting it? So it's most likely going to come and test this level here or come back to this low here before starting to go higher. Now, this is the method you should always use to mark your support and resistance levels that are going to work. Always watch. We have said that identify the levels, watch how the market is approaching there. That was the first, how do we pick the levels? Then we went on to mention the rules that you're supposed to use. We have said that, okay, if the market is approaching with a very strong level, or even it's approaching with a very good momentum, make sure you identify which level is untested. After identifying the untested level, then you mark the low. But this one is not so much of a must. But this low, why you put it there, it also helps you to identify if the market is no longer interested in continuing that particular direction. In this case, this is a buy. But if it was going lower, you would mark, for example, you mark this, and also you mark the low, and also mark the untested level within this area. But you mark this one just to help you tell you that the market is no longer interested in continuing lower. In this case, if the market breaks this low here to go down, we know that the market is no longer interested in continuing up. It's now interested in going down. So there's no use of us starting to look for buys, but we should be looking for sales. That's the importance of the last point. If you put these things together, then it will make much more sense to you. Now let's try to, this already happened. So we shouldn't focus so much on it. I just wanted you guys to understand the rule. Now we're going to analyze a market, a live market that's happening right now. Then you can see, you implement them and see if it will work for you or not. Now this is, by simply implying this is where most of those strategies that most people use these days comes from. Now within here is when you identify if there's an imbalance. We have spoken about an imbalance on the channel before. Sometimes you can say that I'm identifying a fair value gap, those untested levels, an impulse and the rest. But you can simply just mark these levels like this and it will be very easy. I like using just simple markings like this so that my chart is clean and decision making is not very hard. So let's see what the market did, right? Let's see what the market did. And you can clearly see the market came and manipulated a bit. Let me just first play very quickly. It came and manipulated a bit, right? It went a little bit low again. Now, for this case, you can see the market closed below, but then again, broke higher. Now, what does this mean? This means that it gave us a false breakout, and then it broke back higher. So here, the market made a low, lower high, low, lower high, but we're interested in the market. Remember the change of trend video we shared with you guys? The market has to break this high here. No, then again, the market came back, touched this area, came retested this point here. You don't want to look for buys in a market that is still pushing down. Then the market finally broke this high from here. It broke from this point and broke back above this level. Now, what does this mean? It means that we have a false breakout here. If I want to take a trade, now I'm interested in taking the trade in this red box. If the market does not come back in this box, I'm interested in taking the trade when the market gives me an entry rule here, or again, it breaks above and test this level here. Right, together, then we can continue higher. So if you're to, let me just first play quickly so that we don't make the video long. So if you're to first play here, you'll see that the market came back, tested this level. So I'll be looking for trades here. I know here this is now a false breakout. The market now has to continue higher. I can clearly see the market again started trending afresh. Are we together? So the market made a high, came back and tested this false breakout that the market had made here, right? Then now it's going higher. Now, my best rules of taking trades are these ones. I've shared even a video about that, how we take entries. You can clearly see this was a false breakout. The market came back and started pushing higher. Now, again here, we are now seeing that the market is pushing higher, but how do you know that the market is, how do you identify the levels that, let me just delete this, we'll finish that one. Let's now identify here. How do we know that the market is, how do we identify a level that we want to trade from using this current market movement here? In this case. So I'll mark this level. You see the market has not tested this point here. So meaning that depending on the capital I have, some people can take trades here or they'll wait for it to come back down because you can clearly see the lower point was tested, right? Now the next one to be tested is this one here. Now the market may either test it immediately or it may come and test it later, just like how the market broke above here and came and tested this later after some couple of weeks, right? So let's check. Let's check if the market tested it immediately. So you can see the market kept pushing higher. I can mark this area also, right? Now, what does this become? This becomes untested level. Remember, we had rules of look for where the market broke with impulse. For example, we had this impulse here, then mark the untested level. Now, in this case, this untested level, I've marked it when the price was still here. So we have this untested level and also we have this untested level. So in this case, we shall be having two untested levels. So let's see how the market behaves. So the market, you can clearly see it came back and tested this, right? Now, depending on the type of trader you are, you can clearly see here, this is 1 week. Each candle here is a week because we're in a weekly time frame. So it came tapped into this area here, and then the market reacted. So this was the whole week that you could have utilized in your favor. And also you see the market broke above there. So you could have utilized all that. So this is how you identify levels that are going to stand out, right? First, mark your level, watch how the price approaches that area, right? In case sometimes it's so aggressive, identify the low also so that you know that if the market aggressively also approached and broke this level here, then you know that the market is not interested in continuing that direction. Are we together? So maybe just remove the replay tool. Now let's go and analyze a current market, right? Let's go and analyze a current market. You can clearly see these levels are still being respected. The market came, respected this one and closed above this level, but this area here was never tested. And you can clearly see the market came back and tested it after several weeks. So this would be your best support level to start looking for change of trend from, right? Let's look at NASDAQ, right? Let's use NASDAQ or EURGBP. I don't know. We can use EURGBP. This one is on my watch list. Let me just use, I don't want to remove my markings. Let's just use, let's use NASDAQ, right? Let's use NASDAQ because I also want to trade it. Now, let's just analyze it together and then we can go to the structure time frame. Now, for example, if you observe NASDAQ, we had an impulse from here up to upwards. So when there's an impulse, you can draw your Fibonacci. I like using the Fibonacci, or you can just mark the untested level if you want. We have this level that is not tested. You will clearly see still it's aligning with the Fibonacci level. It's aligning with one of the Fibonacci retracement levels. But why the market didn't come back into this area? Because the market came and touched one of the support levels. I mentioned that each Fibonacci retracement level acts as support and resistance. So that's why it pushed higher. Now, the market broke this turning point. Let me just clear this. I'll just clear this. So I'm just going to mark this, right? But now this is just for direction purposes, right? I know that the market is supposed to come here and then it will continue higher because NASDAQ is in an uptrend, unless it comes and breaks this low here, right? But let's focus on today's topic. This one I was just trying to do analysis because I want to trade it also. Now, when you come to the structure time frame, like we have mentioned, it's aligning with the monthly level. Now, which level was broken and never tested? The obvious level is this one here. That's the first thing we have said. The next thing we are saying is watch how the market is retesting. Now, so far you can see the market is aggressive this week, right? So if the market is aggressive, what are you going to do? The next step is to mark the last low that the market gave us. The last low was this one here. After marking the last low, the second point is which level was not tested. So we're just going to mark like this. Now, you know that if the market approaches this level aggressively, unless this week ends when it has rejected and starts giving us a trend, then this level will hold. But if it approaches it aggressively, expect the market to come either here or even back low here, and then observe for change of trend. If there's a false breakout, for example, I can already identify there's some bit of false breakout here. Let me just change the color. You know that actually there's a higher chance that the market will come back down here. Let me just change it to blue. You see? So if the market approaches it with a weak momentum, this level could hold. But if it approaches with a very strong momentum, you know that we're going to come back lower here. Now, usually I like bringing out confluences. I've taught you guys how to use confluences. For example, this is an impulse from down here up to here. So I can also mark, I can bring out my fib level and push it and pull it out here. Now you can clearly see the areas that have Fibonacci areas, the golden ratio is here. So between this area here is where we expect the price to come. But remember, I've also mentioned that do not just take a trade because it has touched your level. Always wait for the market to change trend. I've posted a video about change of trend. If you don't understand what change of trend is, make sure you watch it. Do not just take a trade because I've drawn a level. These levels that we mark are not those that control price. Price is controlled by very many factors, not these technical tools that we use to mark, right? If it was just controlled by these technical tools that we use, everyone would be making a lot of money, right? So mark your levels like that. If the price approaches aggressively here, higher chances it's going to go lower. So you don't have to focus so much on this. Then you put your emphasis on this level and this level here. Are we together? Because this was a false breakout. You can clearly see, pushed price up, reacted, broke down to come and react to this level. So there are higher chances the market may even come slightly lower. Then we can start looking for buys again. Because we expect, or personally expect, NASDAQ to make a new high. So this is how you identify proper levels that you can really base on or focus on, and you not be faked out, right? One, identify a common level, a normal level. For example, this is the obvious level. After that, watch how price approaches. After that, identify untested levels. And then you can mark the low. If the market broke that low, then you know the market is no longer interested in continuing higher. We together? Once again, we have done a live market analysis on NASDAQ, and I still expect NASDAQ to continue high. It tipped up a new high, but I still expect it to make a high. I expect it to go slightly higher than where it stopped, right? So that is it for the video. If it made sense to you, you can give us a like button, and also you can share it to whoever you think is struggling with this. And also you can backtest it. Do not just take anything that you see online. Make sure you backtest it to see that it suits what exactly you're looking for in your trading career. The major point is to make sure that you're improving in your trading, not inside to take you backwards. That is it from us. Have a great time.